Hello, everybody. Stephen Green here. Green Effect Podcast on the air, Season 4, Episode 6. Lots of stuff to talk about today. First off, I have to say, I got a few comments from people that my recording last week had like parts where I just froze for a minute or two. Not my fault. I kind of found out it happened after the fact. I do watch this stuff, but I didn't notice it actually froze. I guess I was recording in too high a resolution because I like to make sure you guys have the highest quality where you can view my beautifulness. But apparently, I was recording it way too high of a resolution, and I guess the computer just froze, didn't know what to do with it all. So I lowered it a little bit today. So hopefully, you'll have my complete antics on camera if you're watching on YouTube. So thank you everyone for pointing that out. I greatly appreciate that. All right, so let's go really quickly into an update 'cause there's a lot of stuff to talk about. A lot of stats are coming out, and I really do want to go through them with everybody so everyone kind of sort through what's crap and what's true and what you worry about and what you don't worry about. So first off, personal updates with me because, well, it's my show, so I can just go ahead and update stuff on me. As you guys probably know, I've got that surgery coming up. Yeah, I canceled it. So, a very long story short, and without going into a lot of detail, the stuff with my neck is actually getting better now. And before we start cutting up Steven's neck and putting Humpty Dumpty back together again, I want to wait it out a little bit. Things are a lot better, knock on wood. Hopefully that continues, but no surgery for now. So unfortunately, or fortunately, more and more podcasts will be coming out. You're welcome. So that's that part. I do feel a lot better. And again, I don't know if I got into it in the show as to what actually happened and how I fell off a deck out east and wrenched my neck, but it was fine for a while, and then it got really bad, and now it's getting better again. So before we go ahead and start doing surgery on my neck, I'd like to see if it gets better. So that's a quick personal update there. Other thing that happened in the last week, and I'm super excited about this because, well, I get to bring more and more content to you. Who's excited? This guy. So I had a fantastic session, and there's going to be another one with a social media consultant, and her name is Lacey Morrison. I think she runs like a company called the Broker Club or whatever. But I went in search of somebody that could just really be a consultant for me. So for those of you who don't know, in business, you can hire somebody to do all your social media, all of your all of your posts, all of your videos, all of your everything. Okay, so you can hire someone basically to do everything for you, and Lacey does provide that service. But I didn't need that. I just needed a consultant to go through all my stuff. Am I doing this right, wrong, or otherwise? And she was awesome. So we had that session. Actually, this is just this past Friday. And don't worry, nothing's changing with the podcast. That's still going to be coming at you, video and podcatchers or whatever the hell they call them now. But it was just a really good experience. A lot of stuff you just don't know, and it's so weird with social media because so many things change so fast. I was learning things and making notes and tweaking, and she's like, "Stop posting this or post that." And listen, if you ever met her, man, she goes like 8 different directions, which you kind of need when someone's like exploring things and let's do this and let's do that and let's break this and let's fix that or get rid of this or add this. It was an awesome experience. So quick shameless plug for her. Just Google Lacey Morrison and you'll find her if you're looking for someone to either do your social media or if you're at the point where maybe you do your own stuff, you need a consultant, she's really good for that. So all right, let's get into the shit show that's our economy. So, man, where do I even start? All right, so let's talk about this. Quarterly reports for the banks were released. Okay, I think everybody released, if not pretty much everybody. So everyone's got the same story. All right, delinquencies for mortgages are up. I see it, guys. I'm getting phone calls on things, and you know, listen, a lot of situations you can save a lot. All right. So my PSA here, my public service announcement if you're feeling tight, if you're not sure, things are going weird, dude, reach out for help. Seriously, reach out for help. Don't wait until, and I had this with a couple of clients where foreclosures have begun. Okay. It's like, guys, I can't help you now. Bank's not going to lend or help you out if you're already gone that far. So, anyway, the bank reports all came out and said that delinquencies are rising for sure, which is not, we all expected that, right? No one said, oh my God, we're all going to get out of this unscathed, which I might say they're still trying to do. I don't know what that's going to look like yet, but they're still trying to do it that way. They've all increased loan loss provisions. And listen, it's not to say that, holy crap, they're expecting the worst. That's not the case at all. When they increase loan loss provisions, because they have to, they know, everyone knows that rates are higher. And loan loss provisions include everything, right? Not just mortgages. So if we really look at mortgage delinquencies in general, don't forget in Canada we don't have 4 or 5% delinquency. And remember, a delinquency is is marked as 90 days late. Okay, that's an actual mortgage delinquency, not 30 or 60. So all of them have increased that, and then we also, of course, have mortgages that are negatively amortizing. Now, if you remember back from the last inflation report, which was like a week or two ago, um, they the major contributor was the increase in mortgage payments, like 27%. Rents were like 7.5, I think, and mortgages were like 27. That's going to continue. People are still going to have sticker shock, but a lot of us professional mortgage folks are looking at the equity in homes or savings or whatever and just trying to come up with a plan for them, really to weather the storm. Let's call it what it is. We've had a 15-year party, okay? We got to weather a little bit of a storm here. It is what it is. So don't freak out by the bank reports. They're still making gazillions of dollars. We've just got, and I know it sounds crazy, but we've got delinquencies and mortgages that we expected. And quite honestly, it's not spiking to 3, 4, 5, 10%. I don't know what it was in '08, but it definitely spiked. Okay. So I honestly, guys, don't go jumping off the bridge just yet. Just wait for that a little bit longer, because I can tell you right now, when rates start to come down, we have a rate announcement this week. When rates start to come down, people will start to recover quicker. Not saying that they're going to have all their problems solved, but they will recover quicker. If you really think about it, when you're increasing your mortgage payments by 27%, don't forget that also includes anything that has been refinanced. Okay, so it's not just the mortgage payment, it's any debt they're adding to it. So I don't know. I look at our household, I see obviously household balance sheets all week long. Um, and I get those frantic calls like, holy crap, what do I do? What's wrong? How do we fix it? Can you give us some advice? How do we wrap debt into whatever? We see all that all the time. Okay, so and I would not be concerned just yet, but we got to monitor it 100%. We got to monitor it, and then with rates right now, I mean Canada, a bond fund in Canada is down, right? It has stayed down. So it kind of went up, came back down. We're about 3.5%. So the bond yields are staying relatively steady, which could lead to um, either steadiness in rates or lower. I will say this. Let me throw this out at you, because I think it's something that we gotta ask this question. Okay, what happens if rates just stay steady at around 4 or 5%? Okay, that is a real thing, and I think I want everyone to get it out of their head that we're going back down to 2%. We're not going back down there. It's not happening. Okay. We could see a rate sale at 3.5. That would be cool. But I think four-ish% is probably here to stay. Like, we're not going back down to 2%. We're not going to see, maybe my grandkids will see that, but we're not going to go back down to that. Sorry, I'm clearing my throat quite a bit there. So it's something to consider. What if rates do stay elevated for longer? Okay. We're going to see most likely prime rate cuts, probably not starting this week. We'll talk about that later, but we're going to see that come down a little bit. And again, I think that will help people recover faster, even though they do have there's obviously high levels of household debt. So, all right. So don't worry about the bank stuff. They'll be fine. I know you guys are all worried about the banks. It's not a big deal. You'll be fine. Okay. What else did I want to go through here? 1 second here. Oh, okay. On the topic of who gives a shit, but I'm going to report it anyway. So remember back in the day, it was 08 or 09, federal government came out with their saving grace, their biggest thing ever. We are going to have a share ownership in first-time home buyers' homes. So if you had at least 5% down, the government would give you another 5%, I think up to 20 or something like that, where I didn't do any of these mortgages, so I don't even know exact numbers. Doesn't matter. But basically, they would say, look, we're going to give you a little more money. Okay. It's in the form of I believe it's a form of a loan. And the thought behind it is here's a little bit more for your down payment, and we're going to save you some interest. Makes sense. Reduce some payments, save some interest, right? Problem is, it was share ownership. So when you sell, a percentage of that realized appreciation on your asset has to go back to the government, right? Genius. Why not? We're screwing the middle class already. Why not take a piece of their freaking house on the way out the door and we'll help them save 20 bucks? It is a little more than that, but you get where I'm going with this. Anyway, nobody really did this. Like, who the hell wants to get in business with people who can't even run their own budgets? Like, why would I take any money from them? Anyway, it discontinued. They got rid of it. It's stupid. How it even took this long to get rid of it, I don't even know. But what a waste. Like, what an absolute waste. Nobody did it. Some people did. How many people actually did this? Oh, so they they were assuming it would get to 100,000 by March 2025, but that's a fantastic number. It didn't even get to 20,000. Didn't even get to 25,000. Like, the actual criteria to get the program was insane. Like, it just didn't work. I had a client come to me just recently, actually, and they were buying a house in London, and it was like a small, like, it was like a 2 bedroom, first time home buyer, great thing. And he wanted to do this, and I told him, yeah, go for it. I mean, hey, I'll do it for you, no big deal. But know the risks and know what you're getting into and stuff like that. I think he didn't come to me for his. I didn't do his mortgage for him, but whatever. All good. So it's I don't know. They said they're going to come up with new stuff to help. I don't know why. I'm just not fucking excited about that. I, it's like, oh, how do I put this? I don't know, man. It's like someone who's really bad at business saying, with a long track record of being bad at business, saying, we're going to get rid of all the crap we did, but we're going to start something even better. And you want me to get excited about that? Yeah, I'm good. All right, moving on. Okay, this is important. Holy. Now, for those of you who don't know, had a recent blood test myself personally. Yeah, had to make some changes. And actually they're really good. It wasn't bad. I'm not dying tomorrow, don't worry, but had one of my numbers come back not in a good thing, not in a good space. So, addressed it much better the whole bit. But for those of you who still load up on carbs and sugar, hopefully you're not loading up on junior bacon cheeseburgers and frosties from Wendy's, because just like when you go to a professional sporting event and they charge a little bit more for better teams, so Toronto, like the Jays will charge more for a ticket for the Red Sox and the Yankees than they will for, I don't know, insert bad team there, right? So when you go to Wendy's now, starting in 2025, I guess it's starting in some US locations, if it's a busy time, that Frosty may not be 99 cents. Is it even 99 cents anymore? Whatever. It might not be 99 cents. It might be a buck 50 at noon because that's a busy time for them. So variable rate pricing based on time of day is coming. From what I understand, the fallout has been steep, and everybody else is like, What am I hearing? I'm hearing like McDonald's gave away free coffee for a month. I don't know, like stuff to just stick it to Wendy's. But people keep finding weird and wonderful ways to make money in this crazy economy. And this is so fast food is probably what hits the middle class and the lower class even tougher because they know that they can go and get a quick bite to eat off the value menu or whatever, right? And that's something that happens in the US. If you go to the US, a lot of the lower income areas or the lower class folks, there's a McDonald's on every corner because it's dirt cheap. So, I mean, companies just find weird and wonderful ways to make money, and this is just going to piss everybody off like you wouldn't believe. Um, but you shouldn't be eating that shit anyway. So, like, don't eat the carbs and the sugar from Wendy's, and you're all good. You show them, all right. You show them, and do not. But is this not a commentary on our world right now? Like, when a Frosty is 25 cents more, like crazy, crazy shit. Next. I got like a buffet of shit here. So here's a good stat. You want numbers and just to show how messed up things are right now. The nice people at CMHC, wonderful people. They actually are. Actually, CMHC is a really good default insurance company. All kidding aside, in case anybody is listening from there. So average rent growth. But I've got this really cool stat actually that is scary as hell. Average rental growth when there has been a turnover. Ooh, you see where I'm going with this stat. If you've had a turnover, but not in a purpose-built rental, ma and pa type rentals, okay? When you've had a turnover in the last year, the average rent change, it's an increase, guys. Rents didn't go down. But I just want to throw some of these stats at you. This is mind-blowing, okay? So turnover, average unit, if it's been turned over. In Canada, increase 24%. Just wait. It gets worse. Who led? Whew. Hopefully no one lives in Hamilton. Year over year, rent increase for turned over units, 41%. These are 2-bedroom units, by the way. It's a 2 bedroom is a pretty good middle ground. Not a 3, not a 1, it's a 2. Shocker. There's math for you. Toronto, 40%. Where some of the other areas that I work out of, these are all major urban centers. So Kitchener, Waterloo, Cambridge, 37% average turnover increase. Holy crap. But guys, think about it. If mortgage so these are like mom and pop shops, right? These are not major corporations owning things. So I just want to put some perspective on this. Okay? Because this is where nobody is going to win this. And let me explain a little bit more. So mortgage payments go up. Okay? Now, mortgage payments go up for not only owner-occupied homes, but rental properties. Think about that for a sec, okay? Well, if it turns over, you got to jack up the rent to make the damn mortgage payment. The number right now, I might have this off by a little bit, but it doesn't matter. It's still horrible. 19% of people who are renting in Toronto are behind on payments. Think about that for a second. 1 in every 5 are behind on rent payments. Holy shit. Not good. Not good, guys. But part of that is probably because they're having trouble making the rent payments. Of that 19%, listen, probably a fraction are professional tenants, okay? You legit, fuck guys, and I'm not saying to do this, but this is legit. You could move into a rental in Toronto or anywhere in Ontario, not pay rent for a full year, and you'd be scot-free. You would just get kicked out at the end of the year. So think about that for a second, okay? No one's going to throw you out because the landlord-tenant board's so backed up. What the hell? So let's come back to this now. rents go up because you got to make the mortgage payments. The mortgage payments are up. People in the middle class or whoever's renting, lower, middle, upper, because the middle class is a gray area right now. They're getting paid the same because employers are not jacking up pays. Okay, you're getting your usual raise, but you're not getting much more than that. Cost of living's through the roof, and then we come back to rents are going up again, right? So this is, and wait for it. If, and this is something people lose, okay? People don't get this next part. Yeah, we got a lot of ma and pa landlords in Canada. Absolutely. If they are now selling their home, their rental home, because we have non-paying tenants, can't keep up, need to realize some equity out of the house. Guess what? There's now, because this is the intention of the government, to get some of these rentals out of mom and pa's hands, put them in, Jody and John's. Okay. If the rental property that mom and pa own now exits the rental market, we have less inventory for rentals. And remember, rental rates are through the roof. Not only the turnover numbers I just mentioned to you, but in general. I post this every 2 weeks. What are the rental numbers from rentals.ca? They're through the bloody roof. So it goes to Jody and John. Maybe they're going to rent it out. Maybe they're going to live there. Who knows? But it's now being dealt with by it's now going to someone with pent-up demand. Our pent-up demand issue, it's going to them. And so this circle continues. So, when people are like, oh, landlords are bad, landlords are horrible. Okay, well, pick your poison here. Like, seriously, what do you want? Okay, that one guy there from, it was on a CBC special where they were talking about how bad the landlord-tenant board was, and there was a guy that got up, and he was like, you know what, landlords have had it good for so long, go cash for keys, get your $100,000 if they want to boot you out. Landlords have had it great for a long time. I got news for you, bucko. All right? Yeah, I get there's a lot of ma and pa type setups. I get it. I understand it. The alternative to ma and pa unloading their rental property, removing it from inventory, and now larger corporations realizing, hey, ma and pa's out, right? Let's jack up our rents in our high rises. Pick your poison, bro. What do you want? Now, I will say this. I know there are some sketchy landlords. I get it, okay? And like anything, though, you're going to get a few that's going to ruin it for the rest. We all know that. That's just the way it is, okay? But I know things suck, but seriously, to that guy who went up there and was like, oh, get your cash for keys, screw the landlord, bro, pick your poison. Like, pick your poison, right? And I get it. I know there are landlords that are trying to circumvent landlord tenant laws to get more rent. I know it is happening. But from what I see, is it the majority? No, it's not. Is it probably a few percent relative to the overall numbers? Yes. Those people should be dealt with. Okay? The backups of the landlord tenant board, I don't know this for a fact, but I'm very sure it's from those percentage of people plus tenants that just can't make the rent payment. I don't think, just like the large majority, there's not a large majority of bad landlords. There's probably percentages like 2, 3, 4% maybe. There's probably 2 to 3, 4% of professional tenants. And I'd bet a couple of bucks on this. If you really surveyed tenants that are currently dealing with landlord tenant board because they can't pay their rent, they're probably there because they legitimately cannot pay their rent. Like legit, we can't pay our rent, which is kind of sad. So if I can bring that perspective, and again, those last little numbers I mentioned, I don't have anything tangible to hook that to, but we've got to look at that. I mean, realistically speaking, right? So, man, this is crazy. the amount of increase in rent, like just off the charts. I don't see any for the Maritimes. Like, I mean, Ottawa, 19%, Toronto, 40, London, 35%, London, Ontario. Yikers, man. Edmonton, only 6%. What the hell's going on in Edmonton? Like, aren't they going through a boom right now? But only 6%. That's probably what it is, right? Everyone's making a lot of money on houses. Increase in rent is not very high. Crazy, crazy stuff. Okay, what's going on this week? So preview, Bank of Canada rate announcement, guys. Oh, I don't know, man. The odds are not. We're not going to see a rate decrease, dude. If we see a rate decrease, I would be shocked because I'm telling you right now, the last week and a half has been bananas. 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 Bana. Bananas. You know what? Not important. But it's been nuts the last week and a half. It really has, right? Multiples. I just had a first time home buyer on I don't know 600,000 in Waterloo. He had to go firm on his deal. He was in competition, like crazy crazy stuff. So it's one of those things where if they bring down rates and hope starts, we might get in trouble sooner because we're all going to get in trouble with this, guys. We've got pent up demand. Remember, building permits are like non-existent, lowest since 1980, 1990, whatever it is. Record immigration still. That ship has not slowed down. Okay, so the second rates start to come down and affordability increases, we're gonna have just we have a bottleneck right now. So Tiffy Boy's got to go. I get it. I can't believe again. I hate defending this guy because he freaking created the problem, but he's got to go slow. If bond prices keep coming down, which they are, and we're seeing fixed rates move for the better, he's got to kind of control the other side of the balance sheet. Right now, guys, housing's important, but believe me, it's not the only thing he's got to worry about. If he drops rates too soon, we could see a drop in the Canadian dollar further. That impacts trade and business. There's a lot of shit buddy's got to like have a look at, okay? And again, I can't believe I'm defending the guy because again, he created this monster. He really did. If not him, him with a few others, okay? JT and his friggin' Epson printer in Ottawa in the basement. And he might be the voice of reason here saying, you know what, we're going to wait. So are we going to see a rate decrease on Wednesday? Because I'm recording this on March 4th at first thing in the morning. Probably not, guys. Probably not. Inflation numbers, you got to remember, you got one good month of inflation at 2.9%. We have not saved the world. We're not ready to go now and just have a thriving economy. No, 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 not at all. That 2.9%, a big piece of the inflation puzzle there was the increase in shelter costs with rent and mortgage. So he still has to balance this out a little bit. Are we going to see a rate increase? Probably not. No, like definitely not, right? Are we going to see a decrease? I don't think so. I think that's the next one, at least the next one, barring anything else coming up really weird. Okay. So that's that part. So I don't know. We'll see what happens with inflation. Yeah, I just don't think we're gonna. Sorry, with probably the prime lending rate, but I just don't think we're gonna see any sort of a decrease just yet. So there's something else I wanted to mention to you guys. I can't remember. It's gone now. It was in my head. Now it's gone from my head. Okay, if I remember, I'll do up a special video. You guys can have a look at that. All right. Any questions, guys, let me know. It is a freaking moving target. Huge moving target. Oh, that's what I wanted to mention to you guys. Don't hang up yet. I did a great video on the weekend, if I do say so myself. And I'm going to repeat this on my podcast. All right? Can everyone just do me a favor? Just do me a favor. Do everybody a favor. Stop trying to pass fraudulent documents. Just stop. Okay? I said this in my video. You're just not very good at it. Okay? Listen, I think as mortgage brokers, we live in the gray all day long. There's a lot of black and white. There's a lot of gray as well. And you got to do what's right. But when you pass me fraudulent documents and my kid could do a better job at doing the fraud or duplicating it or modifying it or amending it, just stop. Like, just don't. Just tell me the whole story, what the problem is, and let me just try to do it well for you, because it kills our industry, it kills our lender relationships, and you get blackballed. Not a good day. All right. So, another public service announcement: for the love of God, stop trying to pass fraudulent documents to me. You're just not very good at this. Don't do things that you're not good at. End on that note. All right. You know the drill. Now I'm really done for sure. Love me, like me, follow me, desire me, want me, whatever. Hopefully, I don't have a video that is going to be frozen in time this time around. 5-star review, guys. I'd love some of the comments I get from you guys. I love the feedback. Thank you. And without further ado, keep fit, have fun, and goodbye.